Alan Sinai is president and CEO of Decision Economics. He's advised past administration officials on economic policies and consulted with Fed chairman. He joins us now live from Boston. Can you say a jobless recovery is truly a recovery, Alan?
And not for those who are out of work. No, we really have a depression in the U.S. labor market in the midst of all other signs that we've entered some sort of recovery in the economy.
But when we talk about unemployment at 9.8% right now, we're on the cusp of earnings season. And there's some concern that corporations are going to continue to cut because they're not seeing the kind of top line growth they'd like to right now. And they've got to meet the street's expectations. So short of providing incentive for corporations to hire, what is going to create new jobs, new hiring?
Generally, increases in sales. Expectations that sales are going to rise and top-line revenue growth is going to show strength in an economic recovery is what makes businesses hire. But as you mentioned, that's not the expectation of business at this time. We have a fragile recovery. A lot of executives are worried about another dip down. We ourselves think there's a 20% chance of a double dip situation. And so corporations in planning for the future are going to be very cautious in rehiring, and I don't think they're through firing yet. The last labor market report Friday said that something like 70% of companies are firing and 30% are hiring. So it's still a very big negative dynamic on jobs in the U.S.
Well, popular belief had been that the rate of job cuts was slowing, and many took heart in that. You don't believe that's necessarily the case, that that's a sign that the cuts are over?
No, it doesn't mean the cuts are over. It's much better to lose 263,000 jobs instead of 700,000 jobs. But losing 260,000 jobs is really terrible. And the household survey told us 785,000 people were not working in September compared with August. That is about as bad as it gets. It's terrible.
When we talk about the Obama administration, the potential of extending unemployment benefits or the possibility of spending way towards new job growth, I mean, what real potential is there politically to helping to put a Band-Aid on this?
The role of a government is to cushion the distress that comes from something like private sector generation of a lot of jobs losses and a high unemployment rate. So extending unemployment benefits is the right and human thing to do. I think the problem with the spending approach to the economic problems is that it doesn't generate private sector sales and demand. It is, after all, the private sector, companies in the private sector that do the hiring, not the government. And that's where we've got to get some action. So the next round of policies, I hope, will be more focused on tax cuts and tax incentives for spending in the private economy, which would then, with lags, get sales higher. I hope they go that route rather than the spending route.
But that's not necessarily going to boost paychecks. And for Main Street, the proof is in the paycheck, right? I mean, if you've got this pool of unemployed people still sitting out there, that's going to pressure wages.
Yeah, that's a big problem. Compensation for workers in real terms is going down. That's unusual when you move into a recovery. That's part of income. Real income, inflation-adjusted income disposable income is flat. Despite the tax cuts and the fiscal stimulus, it's flat year over year. And if flat disposable income, no growth in disposable income, that's the biggest short to intermediate determinant of spending. Consumers just don't have the wherewithal in any permanent way to spend enough to raise sales enough in a permanent way to get companies to hire more. So they're not going to hire more, they're going to hire less. That's going to keep on hurting income, and that's going to keep on hurting spending. And we're stuck in I think, a very negative job situation here.
All right. Well, it's going to continue to be the question. You say now a 20% chance of a double dip. So we're going to follow that and follow you. Thank you so much, Alan Sinai, for your insight there on the mother of all jobless recoveries, as you put it.